Hi, this is Danielle Shay from Simpler Options. Welcome to the free video for the night of October 18th, 2018. So our members have been asking me lately for short setups, and typically what I like to do is focus on the strongest trending sectors in the market. However, with the type of volatility that we're getting, thought it might be worth a look at some of the weaker sectors. So what I have done is pulled up XLC here. Of course, this is a new sector. However, of course, the stocks within it are not new. So even though this data itself is rather new, like an IPO, the stocks themselves are, of course, been around. So I've been waiting to analyze this actual chart until I got a little bit more history on it. And at this point, I think we can clearly say this is an bearish trend. So, you have these previous rally swings right here, and we made a low of 44.93 with a ready aim fire buy signal. Now, this so far has been good for a retracement directly up to the 618, which hit, held, and failed. So, when I have something failing at a 618 retracement, that's a pretty clear sign to me that it's not going to continue to the upside. It's also a failure at the 21 period simple, 21 period exponential. So for right now, I'm going to say that that just looks like a pullback within the downtrend, and it looks like something that we can short. So how are you going to do that? Well, I'm still not a huge fan of playing XLC just by itself. I suppose you could come in and buy some puts on that, but without a squeeze, it's just not really my favorite. But I do like Facebook to the downside. So you can see right here, ever since the last earnings date, Facebook has had quite a rough time. We had a previous strong bullish trend, but this has not recovered at all, and every single bounce has just been a good opportunity to short it, especially that last one with the squeeze. So now that we've rallied off of the lows again, came back up to symmetry, it looks to me like we're failing here, and looks to me like a good spot to take another short setup. So, of course one could argue, well, it's fallen so far, how could it possibly fall more? And of course, that's always something to think about. But at this point, trading up near the 8 EMA, if you're going to give yourself a stop up to the 21 or up to 162 with a target of between 141 and 145, I think that's plenty of room to work. And you do have a squeeze right here with a ready aim fire sell. So you can see that a lot easier on this lower time frame chart coming in right about here, and you can see the target at 145, and you can also see the pause of the 618 on the way down. So if you do get a bounce in this from here, I think it would just be a better place to add personally for another leg lower, but I did go ahead and sell some call credit spreads on this guy. I also think buying some puts on it would also just be fine. But anyhow, that is my short setup for you for the day. Keep an eye on the market, see what's going on. I mean, you just got to understand that this earnings season is going to be, it's going to bring some volatility, right? It always does, but especially after the correction that we experienced in October, a lot of heightened sentiment surrounding the price action. I think it's going to make this season even more volatile. So keep your position size low, stay on your toes, and don't get over leveraged. Thank you very much. Good trading, and I'll see you in the next one.